Hi, this is Tom Scott CPA again. Today we are talking about eliminating tax debts in bankruptcy. Welcome back. Before we begin, I want to draw your attention to two buttons on my blog. Click here for a free tax relief consultation. Click here to view my free tax resource library. Back to our topic of the day. Eliminating tax debts in bankruptcy. In many cases, a taxpayer is still liable for tax debts after bankruptcy, but bankruptcy laws allows the discharge of tax debt only in some circumstances. A tax debt is more likely to be discharged in Chapter 7 than in Chapter 13 bankruptcy. In Chapter 13, tax debt, just like any other debt, is paid back on a repayment plan. Chapter 7 bankruptcies allow a debtor to discharge or wipe out debts, including federal tax debt. Federal tax debt that can be wiped out depends on the type of tax debt and certain conditions under Chapter 7 bankruptcy. The tax must be for income taxes. Payroll taxes and penalties for fraud are not eligible for discharge. The tax returns for the debts must have been filed 2 years before filing bankruptcy. The tax liability is at least 3 years old. The tax debt is from a tax return that was originally due at least 3 years before filing the bankruptcy. The IRS assessed the tax debt at least 240 days before the debtor filed for bankruptcy. The taxpayer did not commit willful tax evasion. Possible evasive actions include changing your Social Security number, your name, or the spelling of your name, repeated failure to pay taxes, filing a blank or incomplete tax return, and withdrawing cash from a bank and hiding it. The taxpayer did not commit tax fraud. Penalties on taxes can also be wiped out in bankruptcy. After the discharge of the tax liability, the taxpayer is no longer responsible for paying the taxes, and the IRS may not garnish wages or bank accounts. Federal tax liens. Even if the discharge of tax debt occurs under Chapter 7, if the IRS placed a federal tax lien on the taxpayer's property prior to the bankruptcy case, it would remain after discharge. As a result, it is necessary to clear the title by paying off the lien before selling the property. Tax debts not eligible for discharge. Tax penalties on tax debt that is ineligible to be discharged. Tax debts from unfiled tax returns, and trust fund taxes or payroll taxes withheld from employees' paychecks by the employer. If you think you can wipe out your federal taxes under bankruptcy, you should hire a qualified tax problem specialist. We have experience and strategies in getting tax releases and negotiating with the IRS to get the lowest amount that you have to pay. My contact information is below. If you have this problem or know someone with this problem, please share this video or contact me. Until next time, I look forward to hearing from you. Thanks again.